If you are earning £100,000 or above in the UK, then your tax bill climb fast. However, there are many ways and obviously legal ways to reduce your tax bill. Tax planning is not just for ultra wealthy people, it's for anyone who wants to reduce his income tax liability and wants to maximize his income or take home pay. So in this video, we will explore tax saving strategies which tax accountants and especially higher earners use to reduce their tax liability, which helps them to keep their hard earned money, from pensions to ISAs to investment schemes to gift aid. I will break down each and every single method with practical advice how they actually work. So stick around, and at the end of each point I will calculate a difference which will make because of tax planning strategies, and you will be surprised how tax planning affect your take home income. If your income is more than £100,000 per year, then for every increase of £2 over £100,000, your personal tax allowance of £12,570 will be reduced by £1. How this income tax personal allowance works? Let's say you are earning £112,000 per annum. On your screen, you can see with every £2 increase in income over 100k, personal allowance has abated by £1. Here where tax planning comes in. So the first and most convenient tax planning option is pension contribution. Pension plays a vital role, especially when you are a higher earner. Let's say you are earning 500,000 and have contributed 60,000 to your pension. This saves you a massive tax bill. On your screen, you can see a screenshot of a tax return in which I have added a salary of £500,000. Let's assume PAY deducted around £211,203. We can also assume with this level of income, you have saved your money in a bank account on which you are earning untaxed interest of roughly £2,000 per year. The first tax return does not include pension figures, and you can see £900 is income tax due. However, on the second tax return, I have included a pension figure of £60,000, and you can see at the bottom it increases the basic band rate. You can see the figure is £75,000. This is because when you contribute into pension, HMRC add 25% in it. Now you can see with pension contribution, it changes your tax liability of £900 into a tax refund of £17,850. Another simple, effective, and powerful tax planning tool is gift aid. Any amount you donate to a registered charity can be claimed on your tax return, and the government adds 25% on top of your contribution. For example, if you donate 500 to a registered charity, HMRC adds 25% tax relief, increasing your donation to £625 for tax purposes. This in turn increases your basic rate band, reducing the amount of income tax at higher rates. Let's have a demonstration using same figures. I use the same figures of £500,000 salary, 2 grand untaxed interest, a pension contribution of £60,000, and now donation of £500, which obviously increases to £625. After this tax efficient strategy, you can see you have tax refund of £18,006.25. With a 500 donation, you have a net tax refund of £156.25. 0.25 pence. And when it comes to earning tax-free income or interest, ISAs are great tax-saving tools. ISAs offer great way to earn tax-free interest and capital gains. There are 5 types of ISAs: cash ISA, stock and shares ISA, innovative finance ISA, lifetime ISA, junior ISAs. Each tax year, you can save a maximum of £20,000 in ISAs, splitting your allowance across the 4 types as you choose. Like for example, the lifetime ISA allows you to save a maximum of £4,000 per year, with the government adding a 25% bonus, meaning your 4,000 saving grows to £5,000. However, there's a catch. You can only withdraw money from a lifetime ISA when buying your first home or after reaching retirement age. And now, when it comes to investing or taking a risk, then enterprise investment schemes, seed enterprise investment schemes, and venture capital trust schemes are the best way to get maximum tax reliefs. The UK government offers some excellent incentives. They have introduced several investment schemes to encourage support for startup and high-risk businesses, offering generous tax relief. Like for enterprise investment schemes, the government is offering tax relief of 30% on your investments. For seed enterprise investment schemes, the government is offering a tax relief of 50% because of high risk involved. And finally, on venture capital trust, government is offering 30% tax relief. Please have a look on demonstration. On your screen, you can see I took the same figures, and then in the middle you can see a venture capital trust and enterprise investment scheme of £3,000 each, on which 30% tax relief we have received. And finally, seed enterprise investment scheme gave 30% tax relief on 3,000 investment. Now at the bottom you can see with investments, tax refund has increased to 21,306.25 pence from 18,006.25 pence, providing total savings of £3,300. So these schemes not only helps to businesses grow, but also provide a substantial tax reliefs for investors. And now the next tax planning strategy, sometimes people call it exit strategy, which is business asset disposal relief. I am planning to record a separate video on business asset disposal relief. However, for now, you can understand that if you have shares and you want to sell those shares, and you must have to report gain on these shares under CGT tax rules, and then utilizing business asset disposal relief and claiming £1 million for a lifetime allowance, these shares will be taxed at 10% instead of CGT rates of 10% or 20% depending on your level of income. So please stay tuned until the next video, and I will explain business asset disposal relief in more detail. I hope now you can make a comparison of how tax planning strategies helps you to save a lot of money. So in this video, in total, we have covered 5 tax planning strategies. So number 1 was pension contribution. Number 2 is gift aid. Number 3 is ISAs. Number 4 is enterprise investment scheme, seed enterprise investment scheme, and venture capital trust. And finally, number 5 is business asset disposal relief. I hope you have understood all of these, and if you have any question, so please don't shy or hesitate to drop a comment below in the section. As always, hand ahead, salute until the next video.